Are you trying to find what are the most undervalued stocks on this crazy market right now? Well, the good news is that today I'll help you with this research and I'll share with you 3 of the most undervalued stocks that are currently quite attractive for the investors at these current levels. So without further ado, let's get to it right now. The first business on my list is one that is quite appreciated by all the coffee enthusiasts, and it is the company Starbucks with the ticker SBUX. This American multinational that is well known all around the globe for the high quality and diversity of their different coffees as well as their high price is currently down by over 8% since 1 year. But before to see why this company has lost that much value despite some great stock market growth over the last year, we'll take a look at what is their current business model. In fact, when we analyze Starbucks business model, it is quite simple. They are selling high quality products that are mainly coming from the coffee branch, which gives them the possibility to sell their products at a higher price compared to some of their competitors such as McDonald's. But the problem is that despite being able to sell their products at a higher price compared to some of their competitors such as McDo, well, they are not as much profitable as them. Plus, with the current economic conditions where we know that many people are struggling to be able to pay the basis of their life, well, their $7 coffee might not be as important as it was a few years ago. However, despite these harsh macroeconomic conditions, we've been able to see that in the first quarter of 2024, Starbucks has still been able to open about 549 new net stores during that first quarter. It makes that they currently have over 38,500 stores all around the globe. During this same quarter, we've seen that one of their best performing branch has been the North American one, where it has been able to increase their total revenue about 9% year over year, and where they've been able to achieve an incredible growth of about 25% year over year in their total operating income. Unfortunately, for their international branch, we've seen that despite some great growth in their total revenue of about 10%, well, we've seen that their operating income were stagnating. However, during the first quarter of 2024, we've seen that the biggest problem came from their channel development branch, which simply includes all the different products of Starbucks that are sold outside of their regular stores. In fact, concerning this branch, both the revenue and the operating income has been down by between 6 to 7% each. But at the end of the day, despite being in some quite harsh macroeconomic conditions at the moment that are obviously impacting the amount of customers that will come in their stores, well, Starbucks is still a quite interesting pick for the investors at these levels. Indeed, with a price to earnings ratio of about 25 and a price to sales ratio of 3, it looks like it could be a quite interesting pick for many investors, especially since the company has been able to consistently increase their total revenue over the last 4 years despite a pandemic that has closed many different stores. At the same time, if you're looking for a great 2.40% quarterly dividend that is paid with a pretty low dividend payout ratio, well, this could be another great reason for you to be looking at a company just like Starbucks. Now, for the second business on my list, I've decided to go with the company Under Armour with the ticker UA. This sportswear company that is currently worth less than $5 billion has been facing quite a lot of difficulties lately, where it has been down by about 5% since 1 year. Indeed, we've seen that they've had some pretty bad earnings report lately, where we can see that their total net sales as well as their total net income have been dropping by about 6% each. This unfortunate momentum for the investors has been partially explained by some important decrease of 13% in their wholesale branch, as well as a decrease of about 12% in their North American branch. However, one of the few good points that came from these earnings report came in terms of the profitability of the business, where we can see that their gross margin has been increasing by about 100 basis points or 1% to about 45.2%, and in fact this was mainly driven by some lower freight expenses. Add to this, another great news that came from this earnings report came in terms of the buyback from the board of managers of this company that bought back over 3.1 million shares of it, and so this represents over $25 million of shares of Under Armour that they have repurchased during the last quarter. This is sending some pretty good signal to the investors because it means that the company themselves are evaluating that the business would worth a little bit more in the future, and at the same time it reduces the amount of shares that will be available to get purchased, and it gives them more value per share. So even if Under Armour is currently struggling quite a lot in this extremely competitive retail market, where this company that produces many apparels and accessories for a wide variety of sports including basketball, boxing and golf, is still one of the largest sportswear brands in the entire world. Plus, with a price to earnings ratio of less than 10 and some excellent price to book and price to sales ratio, this could represent a true bargain for many investors right now. It is why I believe that once this company is going to be able to have a true solid quarter in terms of their financial results, I believe that they will regain the trust of the investors and that their valuation could explode after it. And finally, the third and last pick is Tesla with the ticker TSLA. In my opinion, and with this current market, Elon Musk companies is one of the rare large cap American companies that is quite undervalued at the moment. In fact, after seeing some interesting growth in 2023, at the moment since the beginning of 2024, we've seen that this company has been going downhill where it has lost over 20% of its value. But this short-term trend could represent quite a great buying opportunity for many investors that are there for the long term. Indeed, despite seeing some slow growth in their quarterly earnings report, where we've seen that their total quarterly revenue have only increased by about 3% year over year, which was driven by a poor automotive revenue growth of only about 1% year over year, well, we can see that for the last 3 months of 2023, their total free cash flow have been growing by about 45% compared to the same period in 2022. Add to this, when it comes to the production and the delivery of new car, we've seen that their last quarter of 2023 has been quite good, where they've been able to increase their total production by about 13% year over year, driven by 14% increase in their popular automobile models, which are the Tesla Model 3 and the Tesla Model Y. And on their side, for the last 3 months of 2023, we've seen that their total deliveries have been increasing by about 20% year over year. Another important aspect to take in consideration when we are analyzing any types of EV companies is to know if their infrastructure is currently growing, because in fact we all know that the classical cars only need to have gas in them to be able to work, which means that they need to have different gas stations. But in the case of electric vehicles, they obviously need to have great infrastructure to be able to charge their batteries and to be able to have a battery that will be able to sustain all the road that they will be making. And in the case of Tesla, we can see that in their latest quarter, they've been able to increase their total locations worldwide by about 25%. But one of the biggest problems that have been impacting the value and the profitability of Tesla lately is the price cuts that they have been announcing since the end of 2023. In fact, this could become an important piece of the puzzle for the next couple of years, where we know that many different models have seen an important cut in their price, notably where we've seen that lately their Model Y RWD have been cut by about $4,000 on their initial price. So in practice, this simply means that to be able to achieve the same level of profitability, Tesla will need to sell more of their total cars to their different customers. However, when we know that the analysts are predicting that the earnings per share of this company will continue to grow at the speed of 35% per year for the next 5 years, it makes that personally, I believe that this company, with a current market cap of $600 billion, will be able to reach $1 trillion of valuation before 2027. Add to this, Tesla is by far the #1 pick in the electric vehicle market at the moment, with some important competitive advantage in terms of the technology that they use for their different cars. And at the same time, despite being worldwide known for the different cars, it isn't the only products that they are selling. In fact, they are also selling solar panels as well as storage products for energy, such as their famous Powerwall and their Mega Pack. And so with some incredible revenue growth over the past 4 years, where we can see that they are close to $100 billion in 2023, it could be a quite wise option to have it on your watch list at the moment and at these undervalued levels. So there you have it. Those are 3 of the most undervalued stocks that are currently available on the stock market. With the crazy growth that the stock market has seen during 2023, as it continues to see during the first couple of months of 2024, it has become harder and harder for the individual investors to find what are the most undervalued companies on the market. It is why if you're looking for a safest option to invest your hard-earned money, you could decide to invest in different great exchange trade funds. And so to find what are the best ETFs to invest in for the long term, check out the video that's gonna be right over here, and I will see you soon. Peace!